Hello, traders. It's 8:02 a.m. Chicago time, 9:02 Eastern on Monday, the 19th of August, 2019. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Hopefully, you hear me nice and clear. This morning, risk on again. We had a risk on kind of sentiment on Friday. We did gap up in the indices, U.S. indices, and today is promising an additional gap. This is, as I talked about a little bit on Friday, this could be another one of those runs that just absolutely obliterate the bears again, and it's certainly looking this way. The market's trading a lot higher. This morning, we are currently trading at 29.22 in the S&P minis, and again in a gap zone, in a gap situation. The low of the overnight session couldn't really get much below the high of Friday, which was quite bullish. The leader this morning is the DAX, 176.5 points up, or 1.5%. Crude oil is higher at 55.57. We're trading October crude, and as I posted on Twitter and in the Convergent chat room, the premium for October versus September is negative 5 cents. Some backwardation. The Euro stocks are up 1.38%. The Nasdaq's up 101.5 points, 1.33%, quite a bit. The Dow Jones is up 279 points. The laggard today are the bonds. The bonds are down a handle and 20 ticks, quite a bit, almost 1% on the futures prices. And of course, gold is off as well, down 15 bucks, or almost 1%. The 10 years down 16 ticks, big ticks. Again, risk on sentiment overall in the market. Just know that we're heading into the market with that kind of an attitude. And that's how things look. In terms of releases, we didn't have anything too big. The inflation rate across Europe came out at 1%, lower than 1.1%. Month on month came in at negative 0.5 versus negative 0.4. There is news that Germany is taking some affirmative action to help the employment situation, and that's helping the DAX take a pop higher. The overall picture, the overall sentiment in the market is that global equities are higher on signs that major economies are looking to counter the stalling growth and are likely to release fresh stimulus measures, and that's what's pressuring the other currencies against the dollar, as well as treasuries and gold, and that's how things are looking currently. Let's take a look at what we expected on Friday versus what we got. The primary scenario on Friday at the time of the trader bite was we were at that point at 28.66. The expectation is for an open auction, a small attempt down, expected potential gap to stay open right here as this box shows. If not, then testing the prior high, and then the expectation is for the market to impulse up and start pushing higher. I was looking for 28.93. If you recall, the 28.93 was the middle of the gap on the way down. It was also the MC low volume node that separated the two distributions. If you look at the beginning of last week, I talk about this quite a bit. I talked about 28.93 being that spot that if we push through, then we're likely to get 28.54. And we managed to get that done this week. And then on Friday, we managed to get the 28.93 test from below. Here's what Friday's action actually looked like. The high of the day, 28.94.75. earlier in the session. It got to 28.93, basically 28.92 and a quarter, and sat sideways until the close where we pushed higher. Let me turn off the zigzags here, less noise. So if we look at the action here, we see that we basically went to 28.93.94 and held steady. And note that the close overall is quite bullish. I mean, the action really shows that the market did not fill the gap. I've added, for those of you looking at the master levels, which are open, which are available to the public. Anybody with IRT can get these master levels. Um, there's a gap we left behind, so I put in a gap zone down here, and the way we finished with the point of control in the upper quartile of the range outside of the IB with a strong finish. The expectation is for continued higher in the extended hours, and that's what actually happened. Okay, so that's how things are shaping up, quite bullish. If we look at the bigger picture a little bit and just step back on the SPX, we'll see that we had this. The SPX actually performed a little differently. We had this impulse down, then we had a pullback flag to the 50 moving average, and then we made an attempt at the low, but we never took out this impulse low in the SPX before testing higher. Would have been more comforting, in my opinion, not that the market cares what my opinion is or what's comforting to any traders. Would have been more comforting to see that low get taken out, and then for the push higher, so that the corrective move has already tested below and found no interest from sellers, and to show us that it has found buyers. I mean, even Jesse Livermore from Reminiscences from a Stock Operator talks about how we test areas when we're looking to go in the opposite direction. We test the opposite direction first, and then we can confidently go the other way. And this market wasn't able to do that. You could see that the new lows on New York Stock Exchange are tumbling. The put-call ratio is expected to continue to fall, expecting the VIX to come in, volatility to fall from here, to continue to fall from here, and that's how things are shaping up. What is this? Let's see. Yeah, so that's what we've got. When we zoom out a little bit and look at what we've done, we've pushed down, had this really strong consolidation day last Thursday. We poked down below, and then we gapped up on Friday. This is really a nice setup for a continued push higher. If we look higher up, let me turn off these stock zones just to reduce the noise here. If we look higher up, you can see that the overnight high is the MC point of control of this entire region, which is also the naked point of control of that day last Tuesday when we got an announcement on China. Remember, we just exploded upwards and went sideways for the rest of the session. And the next day, we took all of that back and ended up reversing. We are back. With the high in the overnight session. The point of control is not far below in this range. So remember, if you recall last week, we were talking about this, and I said, the way this is trading, this is likely to make its way down to 29.54, and then it was disrupted by this news break higher. And then what happened the following day, the Wednesday, is that we resumed, and I said we can almost act like this never happened. This never happened here, and just look for the market to continue to push into that 29.54 area, and it did. It did so on Wednesday. Thursday it stabilized. Friday broke out of this down channel that you see in front of you here, and this is pretty bullish. And we push back up into that point of control in the overnight high where we found sellers. So very, very methodical, structured trade over the last couple of weeks, in my opinion. Doesn't make it easy, but it makes it more. I believe the intention with the higher volatility, the intention's always much clearer. As volatility collapses, things get murky. It gets tougher to trade. I could tell you that my expectancy drops as the volatility drops. So the market's just not as honest about its intentions. This is the overnight session. We open up and immediately push higher. We go sideways through the Asian session, just create this big zipper, this big high volume node. But the real volume comes in on the European Open right in here, which is quite bullish from the get-go. And then we continue to push higher into that 29, 28.50 MC point of control, naked point of control. And that naked point of control comes from the news day last Tuesday. And so we are back in there. The overnight point of control is near highs. The market is not backed off. It's above mid. The inventory is 100% long, 100% above the prior close, and the delta is quite strong for an overnight session, having 10,000 plus contracts. It's we don't see that very often in the overnight session. It's quite strong as well. So my expectation is it's likely to have relatively shallow pullbacks unless we see an impulse down that really just annihilates the longs. I'm going to be pushing from the long side, as you can see. As I said, there was one test mid early on during this chop, but since then, since it ran away, it really has not tested VWAP or the mid, and it's a bit of a runaway market currently, and it's not able to move away from the highs. Okay, so that's how things look. What are we looking for today in terms of what scenarios might play out? Let's set up the chart here. All right, so here we are. Here we are. We are right up against the overnight point of control. We are at the bottom end. If you look at this box here from that Tuesday news day, 1 second. From the Tuesday news day, as we look at this box here, it is going to be very important to see whether the traders can, the participants can push into and through the box, come out the other side above 29.36.37. Otherwise, it's likely to revert back. The gap here is relatively large. I'm expecting an open auction on the primary scenario, given how we're set up in the overnight session. I'm expecting the primary scenario to pull back to about 29.13, potentially 29.08, consolidate, impulse up, push that overnight high for the overnight stat and start pushing into that 36, 37 area. I have a 35 stock zone here. Consolidate in this area and push higher before it closes. It levels out on the close. So I'm not looking for that 44 to go today, although it's not far. It's only 20 points away. It's a Monday, so I don't have very high expectations. I do expect the market to push up after balancing out, though, following the open. So pay very close attention to the open and see how it treats the market. Secondary, it opens and it pushes the high right away into that 34, 35 area, impulses down, comes right back down into this 18, 13, and starts reverting back, responsive selling back to 2901, 2900, potential poke through, and then a bounce, scenario 2. I'm not going to draw scenario 3 and 4. Those are open test drives that drive us into and through the 2944 and potentially into 29.50 today. And then scenario four is a test up, drive down that brings us back into equilibrium at 28.89 and brings us back into the last 3 days of trading ranges. But most likely, the market is stabilizing. We're seeing it in the macro products. We're seeing it in the dollar basket and all that. I'm expecting that to hold pretty well today in terms of selling. So I'm really pushing for longs into that 34 area. The overnight high is likely to go. I'm pushing for longs. I'm looking for longs into that 34, 35 area and potentially pushing through to 44, but not so likely. I'm not expecting 20 points of range today. I'm expecting the VIX to fall off. I'm expecting volume to fall off. We saw volume fall off a fair amount on Friday. I'm expecting it to continue to fall off, and therefore ranges are likely to fall off as well. Probably not the best day to be aggressive today. So just chill, let it set up for the first 15, 20 minutes, and then we can just go from there. Okay. Remember, your job is to be here tomorrow and the next day and the next day and the next day. Your job is not to swing for the fences and try to make $1 million in 3 months. That's just marketing and sales nonsense. It is extremely difficult to do that. You'd have to have a hefty amount of luck, and luck is pretty much most of it. So your goal is to be here tomorrow and then to be here the day after that and the day after that and the day after that. You can't do that if you're risking 30, 40% of your account on any given trade or day. Okay, be smart. We want you to be here. We're a community and we're going to continue to build this community together, and we can't do that if people just kind of swing for the fences. Good luck, and I'll catch you tomorrow morning. Take care.